It takes 20 minutes to process a family of 4 at Pearson into the country, and it takes 7 years to build their home. Mm-hmm. So we cannot catch the CMHC balance predictions in this period of time. It takes 7 years. So we'd have to have millions of homes currently under construction to catch up. So even if we put a full-blown pause on inflows or somehow controlled population growth, the easiest lever is immigration, then we're not going to have balance for probably 2 decades in this country unless something really big happens.
Hi, I'm Dean Orrico, lead portfolio manager of our Middlefield Real Estate Strategies. And I'm really happy to be joined today by Mark Kenney, who's the President CEO of CAPREIT. For those of you who follow us on our YouTube channel or our social media platforms, we regularly do these fireside chats with CEOs of core portfolio holdings, and for holdings that we really believe do have a really excellent outlook and where we have a CEO who really has something to say. And I think Mark Kenney really fits the bill for that. He is one of the leading voices in the multifamily sector in Canada. He's been with CAPREIT since 1998, several years now as CEO, and he has sat on the board of a number of real estate associations in Canada. So I consider Mark to be a leading voice and expert in the multifamily sector. And I think that's also supported by the fact that he's a CEO of, the largest multifamily REIT in Canada, in CAPREIT, which, as I say, has been a core holding of ours really since it IPO'd in the mid-1990s. So we've known the company a long time. And today it has about 45,000 suites across urban markets in Canada, about 80% of which are in the 7 largest markets in Canada. And he also has a portfolio of manufactured homes, as well as an interest in a European residential REIT by the name of European Residential REIT. Yeah, funny how that is. So firstly, welcome, Mark, and thanks for joining us today.
Yeah, thanks, Dean. It's a pleasure to be here.
So I want to get into a few things here that I think are germane to the multifamily sector in Canada, and I think has got a lot of people wondering how it's going to evolve, maybe beginning with the regulatory backdrop. And I know you've been an important voice with the federal government, along with a number of other multifamily REIT CEOs in Canada, and helping them understand some of the housing challenges we have. And you're also quite vocal on social media, which I appreciate because it gives us some insight into your views and CAPREIT's views on these sectors. And given everything that's happened, we think the federal government actually has made some important strides, which you can touch on. If you had to wave a magic wand here, Mark, and say, what are the 1 or 2 regulatory changes that you think would really help the housing sector in Canada, what would they be?
It's always going to be provincial regulation first. What investors want is a clear line of sight on stability. And regulation, which typically resides at the provincial level, has always been, the differentiator from one province that gets investment versus another. So I say to investors on a regular basis that Canada is now viewed as one of the number 1 housing markets to invest in. So there's literally trillions of dollars that want to invest in Canada, but many investors just stop and say, is it safe to invest in a particular province, in a particular jurisdiction? And this is the thing that's holding us back from an investment flow point of view. It's not the capital. There's endless capital for housing investment in perhaps one of the greatest housing crises in the Western world, which is what we have here in Canada. So I would say provincial regulation probably first. All levels of government have to open their arms to business and say, please come. Otherwise, their alternative is they have to build all the housing. You just can't simply have population growth without beds for people to sleep in. And that's where we find ourselves today.
And if you had to put your thumb on one issue that you think the provincial government, in Ontario, Canada's largest province, should consider, is there anything that really comes to mind?
Well, several years back, there was a unintended consequence of trying to cap rent increases for purpose-built rental. It's capped at 2.5%. That seemed, the industry was concerned, but not, up in arms at a time when inflation was ticking around 1.
You're right.
And didn't seem to be something to get too fussed about. Now that we find ourselves in a full-blown housing crisis and something as political as moving a guideline increase to above 2.5 is a problem for governments. We tell government, though, they've got to stop the stigmatization of renters. Not all renters are poor. And the idea of using a blunt instrument protection measure is just not helpful for the investment environment.
So dare I ask, in Ontario, do you think there's any risk to the ability for CAPREIT to actually charge market rents on non-rent controlled properties, or do you think that hopefully is a non-issue?
I see it as a non-issue. Like, government seems to appreciate, at least when we have the direct conversations, the narrative has completely changed to please help us. And the please help us narrative is happening at the municipalities now. It's happening at the province. And for the first time, the federal file, like, they never really were mixed in the housing game, other than CMHC, which had some great, overall policy programs, and gave Canada tremendous housing stability for decades and decades, until things kind of went sideways with population growth.
So along those lines of affordability and housing crisis, you've been very outspoken about we need more affordable homes, but we also see rents moving up. In your view, is this getting to the point where rents are out of reach for a lot of Canadians, or how do you view that issue? Because I think that's a hot issue for especially younger people coming into the housing market, not being able to afford a home and then looking at rent saying, I can't even afford rent.
Well, there's no good answer for anybody coming into the housing market today. Like, there is no safety zone. There seems to be nowhere to actually go in Canada, period, unless you're going deep into the north, and even there, they have their own housing issues,
right,
with just getting stuff built. So anyone coming in, whether it be to buy a home, to rent a home, or to any form of housing, period, government housing, it's a completely different topic, it's got big challenges. But what I like to point out to government is that effective rents have been going down in places like Ontario quite a bit over the last 5 years.
Explain that when you say effective rents.
So again, we love to talk about the macro, but in real estate, it's about the micro. We've all heard location, location, location. Well, I call that like the micro, okay? So when we look at our building specific assets, what you see happening is that our most expensive buildings, for example, have the highest income earners, so their affordability is the best.
And you measure that by what? Rent to income levels? Is that one metric you use?
Rent, that is the metric to use. It's the metric that CMHC uses when they look at the overall market. But the conversation needs to be about specific assets. So then when you flip to the least expensive assets, these are where incomes are the most distressed. And although rents are quite low, we're talking about extreme unaffordability.
Right.
So it's an upside down world where our assets that are the least expensive on a monthly basis are the least affordable, and our highest rent buildings are the most affordable for the communities they serve.
Right.
So that is a big problem. The other problem is that tenured residents, have, like I said, have seen their rent going down because of this guideline increase. So, when you say all renters are poor and guidelines capped at 2.5, we had a couple of years of 0 where the government imposed 0 increases. You've seen 90% of our residents seeing their actual rent go down as inflation has gone above 2.5%. So yes, it's ticking up slightly, but not nearly at the pace of inflation. So their housing costs have actually become far more affordable. And this has caused a real problem in the market now, where people they're seized. Nobody is moving. Like, you're seeing the same thing with home sales in suburban areas. There's nothing for sale. There's nowhere to go. You're seeing the same thing in rental. There's no movement of tenants moving in, moving out, because there's nowhere to go.
So that raises two questions. One, what do we do, if anything, other than just increasing supply at the more unaffordable, lower level of the market? And then on a related point, talk about this lower turnover in, say, CAPREIT's portfolio and how that impacts CAPREIT as a whole.
So on the CAPREIT topic, it's like, I have to clarify for a lot of folks that I'm very upset about the housing crisis as a Canadian, as a dad, as someone that cares deeply about what's going on in local communities. This is what I'm upset about. From a CAPREIT point of view, the fundamentals are unbelievable. This is not where we want to be. Like, they're too good. We're seeing mark-to-market rents now that we've been pumping out 4 quarters in a row, just hovering between 25 and 30%. Okay, there is no end to this. What we see with this big population growth issue that really started surging in, I'll call it 2018. Well, actually, it started in 2015 if you actually look at the data, but really started showing its face.
Not coincidentally under the Trudeau government, it really started picking up.
Well, it's immigration. Let's just call it what it is. And without a sensitive plan to house people, you've got a problem. And the problem was growing, and it was growing, and it was growing. And then you went through this phase where, business was being blamed for greed. And then finally, the stats have just become so overwhelming. Like CMHC's call out of needing literally millions of homes by 2030 is got us in a real jam. So think about that for a second. The quote that I use, it takes 20 minutes to process a family of 4 at Pearson into the country, and it takes 7 years to build their home. So we cannot catch the CMHC balance predictions in this period of time. It's going to take 7 years. So we'd have to have millions of homes currently under construction to catch up. So even if we put a full-blown pause on inflows or somehow controlled population growth, the easiest lever is immigration, then we're not going to have balance for probably 2 decades in this country unless something really big happens. Governments are doing the right thing. Looking at HST, for example, as a rebate to constructors is a great step. But we're trimming around the edges here. We're not doing wartime-like efforts to really build the homes that our kids need.
So, we're touching on increasing supply and doing our best there. But as you say, it's a slow-moving process.
Yeah.
And then we're also talking about potentially putting some constraints on demand, even though you've got such structural demand that's already in the system. Do you think at some point here our immigration levels come down? Do you think that's likely by government, whether it's the Liberal government or another government?
Any government that is going to have the task of addressing this file has to deal with both, like you said.
Right.
And they have to deal with both in a never before seen way in Canadian history. We've never been here before. This is what I don't think is really being properly understood by the general population. They think, interest rates are going to come down and houses will be more affordable. No, they're going to go up in value even more is the likely outcome. Imagine a time, and we've got investor graphs where you see the rate of population growth and then the decline of home starts. And we've never been here before as a country. It's an unplanned mess. And I'll give you a little example, okay? Government wants business to solve the problem. Business wants government to solve the problem. Everybody just wants the problem solved. We don't take the time to understand basic things that are working around the world. For example, because Canada has a lot of immigration, huge inflows into Toronto, Vancouver, Montreal. This is where people live. I call them islands because we've run out of land. They're bound by water and greenbelt and suburbs. All 3 cities. Montreal's actually an island. The other 2 have the same problem. But we don't have the infrastructure. So we have lots of cheap land in Canada. You get on an airplane, you look out the window, what do you see? You see land everywhere. You go, why is there a housing crisis here?
Right.
Well, because you can't build on that land without municipal services. You can't have multifamily construction on unserviced land. So that's the question. How do we release cheap land? Well, we're waiting for the broke municipalities to do it.
Right.
So the land will never get cheaper if the municipalities don't release infrastructure. So what do other countries do? Well, in Dallas, Texas, they have these municipal utility districts. I think you and I have spoken about it before.
Yes.
Let the private sector build it and hand it over to the municipalities. They do it 30% faster, 30% less money. So that's not anything we're even talking about in Canada.
It's not even the conversation.
If you look at the window here in Toronto, you'll see an endless sea of condominiums. We put a foreign home buyers ban on. Well, Australia did the same thing, but not for multifamily high-rise. They did it for homes in the subdivisions where families couldn't buy homes. That's smart.
Right.
In Canada, we stopped the only source of rental we've had in the country for decades by stopping investment in condos by foreigners.
Yeah.
Most of the condos that were launched downtown here were financed by foreigners.
Correct.
Why are they being demonized?
And going into the rental market.
Going into the rental market. So now we're playing a little game of let's ban the bungalow buyer in Scarborough that's taking it away from a local family. Well, that's not even really happening in any significant numbers. The significant numbers are on condo development, and all those source of funds have been taken away.
So we've got this backdrop, which, as you say, almost make this market too attractive for multifamily players like CAPREIT.
Yeah.
So let's hone in on CAPREIT a little bit.
Yeah.
In that you've got this strategy that's been underway for at least a couple of years of really disposing of your older, lower quality assets and recycling that capital into newer build. Maybe give a bit of background on that and why you think that's net IRR positive for CAPREIT.
So it's the proverbial no-brainer. Most investors that we've spoken to can't believe we're doing a high grading strategy without dilution. And it's the dynamic of the market that's happened here that we're moving fast on. What do I mean by this? The lowest income buildings have just as much CapEx, just as much financial investment required without the returns. There's reputational risk there. Folks are distressed. You're more likely to get rent strikes going on. You're more likely to get noise in the media. You're more likely to get lots of trouble. And the returns actually, because the rents are low, are not great because NOI margins, utilities cost the same, taxes are the same, your base cost is the same, but the rent levels are so incredible.
So your returns are lower.
Your returns are lower.
Even on a value add type of strategy, the returns are still lower?
Yes, but the buyer for these buildings is the private market. Entrepreneurs that'll come in and do things that we won't do. Okay? I hate to say it.
Yes.
But this is what they're going to do.
We've all read about these things.
Renovictions. CAPREIT's never done one in our history. We were called out by government. I said, give me the name of one tenant we've ever renovicted in our 27-year history now, and I'll give you $100,000. We've just never done one.
And Mark, you and I have talked about maybe that strata of your portfolio maybe being sold to government and making that social housing. Is that something that's underway?
Okay, so this is something I'm screaming at government for because my preference is to put it in government hands. Canada has less social housing per capita than the US does, and we call ourselves socialists, okay? You can't catch up. The only way to catch up, you can't catch up with building. You can only catch up by acquiring buildings in income-distressed neighborhoods at a third of the cost of building new.
Right.
It's eminently wise, okay? If you want to attack income-distressed buildings, why don't you buy them in income-distressed neighborhoods? We're a willing vendor of this, as are our other REIT peers. We've had some success. We've done some announcements. It's going slow, but I would be prepared to look at different valuation going into a nonprofit versus the private market, just to be good corporate citizens.
Signal to government, right?
Signal to government that we are the good guys, and we've had some success with that. But we're moving forward with the strategy. At the same time, we've got these poor developers, merchant developers that launched buildings during distressed times a couple of years ago when things were rocky. We'll
really
call it.
strapped now.
Yeah. They're strapped with interest rates. They need to sell. And because they signed contracts for those buildings to be built 5 years prior, we're buying them at 20 to 30% below replacement cost with residents in place or being leased up. So we're trading cap rate for cap rate equal, but ultra high quality. So the buyers at the lower tranche are entrepreneurial. They don't even know what a cap rate is. They look at price per door. They've got a whole different business plan. Those buyers are very active in the market, and the buyers for the ultra quality are absent. The institutions are pens down on real estate,
right,
and we are the most active buyer in the marketplace of these. So the quality is mind-blowing that we're putting into the portfolio. We've averaged about $700 million a year of assets out, assets in over the last couple of years. I think this year will be our biggest year.
We're targeting about $400 million into dispositions this year.
And on the acquisition side, you can expect the same kind of activity that you've seen in prior years.
And as you say, who are the likely buyers of that $400 to $500 million in dispos this year? Are they individuals? Are you having any discussions with provincial governments? There was a deal done by one of your competitors in BC, I think, late last year. Is that a sign that maybe some lower strata social housing availability at the government level's going to happen?
90% of our transactions have been to private individuals, virtually no institutions. We've done our own sort of nonprofit announcements. I would say the EB fund in BC is a $500 million fund. I think it's wonderful. But you have to imagine, a new fund like this moves at very slow pace. And nonprofits are new getting their hands on this money. So it does take an inordinate amount of time. You have to be a very patient vendor, which we are. And I think the market can expect, we've been so vocal on this issue. I think it's fair to assume that the market will see us participating in these kind of
that's good. I think that's good for CAPREIT. It's good from a social perspective. And when you think about this backdrop right now, we've got this insatiable demand. We've got this constraints on supply. Rents are moving higher. Are you concerned that we get to a point where rents just become too high for the average Canadian? How do you think that unfolds here over the next few years?
I think we're already there. I think the reality is we're there, and I can't see a line of sight where it ends. I talk to the peers and say, when do you see balance being restored? Going back to, it takes 7 years on average to build in urban centers, and the starts aren't there. The people are here already, and there's more coming. So I cannot see, sadly, restored balance for it's hard to call, but 10 years would be extremely conservative.
And this, in your view, I think is not a headwind for CAPREIT, because your average rent today is at $1,400 a month, and you're a long ways away from that unaffordability level that may be north of $3,000 a month. Is that the right way to look at it?
We've got the longest runway of growth. If you look at just the rents that we're achieving on turnover quarter over quarter, our runway is definitely the longest, because our mark to market on turnover is the highest on the lowest number of suites. So CAPREIT has, as a portfolio, we're churning the absolute lowest numbers. Not great to get the market, but we're achieving the highest mark to market rents. So people will say, what is your overall mark to market? We don't disclose that. But you can pretty much do quick math and see this runway is very different than peers. Very, very different.
And even though your turnovers are less, you think, so i.e. you might not be able to realize that mark to market as quickly as maybe you did 3 or 4 years ago. It's still going to be dripping in over time. Really.
Well, a long time. And I think we've got to get better on giving math to the market, that they understand how long this is. So for example, when you have a market change and a market surges and you're in a free market building, all of your rents go up in 1 year, but then they plateau. Okay? So I think the market's got to be careful about running a never ending, chart right up. When you can get at the market quickly, it goes up quickly and plateaus quickly. Okay? Now, in our current environment, I see constant demand, not putting a full-blown plateau there. It'll level out. In the case of CAPREIT, because it doesn't plateau. Right. It just doesn't. I can't see signals of a plateau for us as far out as I've ever seen in my career.
Let's talk a little bit about costs. Inflation is this buzzword that's been around now for the last couple of years. What kind of cost inflation are you seeing in your business? We saw it, in 21 and 22, more in 22. Is that starting to plateau now, Mark, like it is, in the CPI numbers that we're seeing, like yesterday?
I'd say on the general inputs, yeah, we were seeing a plateau there. It's leveling out. I think in the case of CAPREIT, though, now we're going to get a little bit tricky in trying to understand what's going on. I think it's simple. We're having trouble telling investors. Because the market is so strong, because we literally have a lineup of people, we've stopped our improvement programs. So our suite renovation program is the big one. Traditionally, we were doing $25,000 renos to get a market rent. Today, we don't need to do that to get a market rent. And the result of that is we're capitalizing a lot less, but pushing basic repairs and maintenance through our income statement.
So you're still doing all your maintenance CapEx. It's just this enhancement CapEx that you're foregoing because the returns don't necessarily support it.
A dollar is a dollar. And what I say to the team, I don't want anybody ever thinking in terms of, well, how does this income impact the income statement? No, make the right decision.
Right.
So it's 100%. So you look at our CapEx spend, it's going way down. It's going to go down even more as we put these new buildings into the portfolio, but it's going way down. But at the same time, there's a moderate effect on our overall expense margins. And so we're still growing NOI margins, which I'm thrilled with, because we've got new costs on the repairs and maintenance side of the business, but none on the in-suite capital, not none, but highly reduced investment there. That's good for business.
Right. We know the REIT sector generally has, unlike, say, the private real estate market, REIT sector's come off in the last couple of years, and we're waiting for it to recover, especially in light of some of the great fundamentals that we're seeing in businesses like CAPREIT. What are your thoughts on what causes this return of investors to the market and this re-rating in companies like CAPREIT back to where it was pre-COVID?
Well, we had a number of boogeymen jump out of the shadows here over the last couple of years. There was health events going on out there that scared a lot of people.
Yeah.
We don't want to even talk about that era anymore. That had an effect on the overall market. Then we had fears of federal tax.
Right, the financialization of REITs and that rhetoric.
I still don't know what that means.
Right.
I still send out a challenge.
Me too, but I'm glad it's gone away.
It's gone away. It's gone away. And then you've got this the new boogeyman, I'm going to call it, that we just keep hearing, and I kind of understand it to a certain extent, is we're in a full-blown competition with GICs.
Right.
So
that's your competition.
That's our not real estate companies, GICs.
Right.
So most people are saying, okay, income's important. I'll put it on the sidelines and uptick my income here and just wait for the dust to settle. Well, those folks are going to miss, I think, the capital appreciation side with REITs. All you need is, we're at the end of the day, we're all good companies in our sector. You look at the 10-year bond, and when that moves, we all move.
Right.
So 50% of it is the tenure.
Right.
And
I would agree.
And the other 50% is just the value add coming out of the group, and that value add can be destroyed with bad management. That value add can be enhanced with good management. So we're doing all the right things in my mind on managing the assets and buying the right long-term income with new construction assets. The market, I think, is going to wake up really quickly when you see a change of interest rates, and they're going to go, what the heck is going on with CAPREIT? This is actually a completely different portfolio. Not that it was a bad portfolio, but the quality of this CAPREIT portfolio, I think the market is generally missing it.
I would agree. It reminds me of Field of Dreams. If you build it, they will come.
They will come.
So it's just a matter of time here. But with that, Mark, thank you very much. Very enlightening discussion, and keep up the great work at CAPREIT.
Yeah, thanks, Dean.